All right, guys, welcome back to the channel. Matt with Green Bar Trading here. We're going to get into everything in just a second. We saw some data come out this morning that really moved the market. Now, this year has been it's been so insane. Every single data that gets dumped on us tends to move the markets a lot. So it's definitely a trader's market, right? This whole year has been a trader's market, um, giving us some really big swings, upside, downside. If you know what to look for, there's definitely been a lot that you can do, to make some money. But you also have to manage your risk. And I expect in 2023, I do expect a lot of people are going to have to recalibrate. A lot of people are going to have to, change some strategies up. And, if you haven't already, because this is not the same market as we've seen in the last 10 years. It's just totally different. Anytime the Fed starts a new cycle, right? So we had easy money for so long after the financial crisis, and then we got COVID, and then monetary policy is now back to tightening. We're back to a Fed that is very dependent on economic data, a Fed that is very hawkish, and keeping that tightening cycle there, and that's gonna prove, you know, to probably remain a lot of volatile markets in 2023. That's what I'm expecting anyway. So let's get into why the market went down. Now you have to realize that the economic calendar, like I just said, is it's never been more important than it is now. So when we get numbers that typically are great for the economy, which is what we see here, it's not good for the market, at least not right now. Okay. I take these things with a grain of salt because they tend to provide a move, for the near term, and then end up, going back the same way that they were going. Now, the only thing is, when we're in a market like this, when we're getting really good economic news, right? So at 8:30, less, initial jobless claims. They were less than expected. All right. That's usually good. All right. Less people filing for unemployment. That's usually a good thing. Not now. The Fed wants to see the job market loosen up. They don't want a very tight job market. And that's what we have right now. So if you have a very, very tight job market, it's just, uh, you know, the employment, right? So the workers, they can get a higher wage. Now that's great for us workers, but it's not great for the companies that have to raise their prices to cover those hours, right? Cover those wage increases. So they want to see the labor market loosen up a little bit. So that's not what we saw today. The stock market went down. Also, GDP. It was revised up, also showing that the market, the consumer, right? There's a lot of demand. There's still a lot of, it's still a hot economy. So that means that the Fed will keep rates higher for longer, just like what they said, and is why the market had gone down last time. So it's just more continuation of that. Now, I think this was a little aggressive of a sell-off after these numbers, and I don't know if they're going to last during the trading day, but that's just what we saw in the pre-market. Now, we have a half an hour until the open, so we'll see what happens. But tomorrow, that's where we see the PCE. All right, this is a very big one for the Fed. The core PCE is a very big indicator for inflation for the Fed. They're going to be watching that. That's going to move markets and probably be more sustainable than what we're seeing today in this sell-off that might be able to reverse at some point. But tomorrow, the PCE is definitely important. So, like we say all the time, know your economic calendar, understand what the numbers mean. And if you're trading, be careful if some numbers are coming out, especially during the day, in pre-market. If you're trading futures or if you're swing trading, just know what's on tap, and that's what we have here. And then next week, it looks like a very easy week. Christmas holiday on Monday. It's celebrated on the 26th because it falls on a Sunday. So, the market will probably be, I think it's closed that day on Monday. So that's it. I mean, the economic calendar is definitely important, but it's going to slow down next week. And I expect that volume will be very light. And that's when we can usually see a more sustained rally. So we'll just have to keep an eye on that. The VIX, I wanted to show you guys this. So the VIX is bouncing off of this key level. All right, every time it came down to this, it bounced up. Now the VIX goes up when our markets go down. So when you saw the VIX pull on back here since October, we saw a nice rally in the market. All right, but now coming down to that key level, saw a little bit of a bounce, and we started to see some more weakness in the market. So that's where we're currently at right now. A decent VIX, still historically high, but not high for the last 2 years. So we'll see what happens here. You can see the range is very clear from 35 to 20. You hit 35, and that's a time where the market is probably going to be oversold at that point. Good time to buy. Good time to buy up here. Probably not the best time to buy down here, at least for now. We'll see what happens though. All right, so let's take a look over at the SPY. See what we're looking at. Now, this was very interesting. Yesterday, in our morning briefing over in our Discord community, I had posted that the 50-day moving average was going to be that next spot that we can see some resistance. Now, that was all the way back here in the morning. We saw a nice rally, and then it kind of hit right at that level. And you can see here, this is the 50-day moving average right here at 387.02, and it couldn't break that yesterday. That's very bearish. Now, I should say that coming out and hitting it, usually the first day it will pull back a little bit, and then it'll give it another run. If the market is strong enough, it will then break through. But that's why these indicators on the daily chart are so key. That 50-day moving average, that 200-day moving average. And I like to use the 20 EMA. I found that that has given me, while nobody can call where the market is going, that has given me the best view of where I can see probability for markets to go with those indicators. Also using RSI and volume as well. All right, so that's the SPY. This is the sell-off here. Right at 8:30, right here, started to really, really fall. It was kind of on the downtrend during the morning, but then right at 8:30, really, really tanked. So we'll see if we could see some support on this. Possibly at 382, which is some consolidation here and some highs here that got broke. That could possibly be a support. And then you have the 380 level there on SPY. So some of the things I'm doing and getting prepared to do for 2023 is I'm setting alerts right? I'm setting alerts on stocks. So I'm looking at daily charts and I'm seeing using technical analysis and I'm using RSI to see when something is either really oversold or really overbought going into key levels. And then I'm looking to either get into calls or get into puts. But I'm setting alerts so that I can, you know, I don't have to look at a million different stocks at once. It just pops up as it hits alerts. I could then open up that stock, take a look at it, see if I'm interested at that time, and then get into a trade. And that's exactly what I did on mRNA. I set an alert right here. See where this arrow is? So I set an alert for this 189 area. Got into really at the bottom, got into calls right down here, and then it had a huge move. I didn't hold for this huge move, but I still had a very, very nice winner on that. And I wouldn't have known about this level if I didn't have these daily charts to look at, right? The break of this level, you got the retest, that's when I got in right there. It would have been nice to hold this whole way up, and that's probably what I should have done right into this spot here, right? You can see here, this is where we've hit before and pulled on back. That could have been a nice profit target. If I wasn't day trading part-time, I probably would have had some more patience with this one to work out here. But that's what I'm talking about as far as setting alerts. And then the other day I set an alert on Apple, which turned out, and we post some of these picks are posted on our Discord under Sunday picks for the week. This was one of them. Apple was coming down into a demand zone. I got in on this candle at 130 is where I bought my calls, and then we see this move. Now, I took one call off when we started to get to this spot right here. So about 135 area, I took one off because this was where we broke down from, and then we were pushing back into it. So I took one off, still have one going. I also did the same thing on XLE. I set alerts on XLE to go off right up here because you can see here we broke down, retested it, and then we were coming back to it. And then I got into puts on XOM, which is ExxonMobil. Very similar chart to the XLE right here at previous resistance, which was support, okay? So got into puts there, and this is what I'm currently on now. So I still have on each of these, on Apple, I still have 22 days on this one contract. On Exxon, I still have 22 days on 3 contracts for puts, and currently in the green on those. But just setting alerts, that's the main goal here. Something that I like a lot going into, what's up, Rob? Going into next year is gold. So if we look at gold, you can see I have alerts set right here. Gold is, Barrick Gold is just, a miner of gold. If you want the gold ETF, you can look at GLD, but this one is cheaper, definitely cheaper to buy down here at 17 rather than spending over $100, for a share of GLD. But I set alerts on this one. This chart looks really good to me for a breakout. Now what you have is you have that 200-day moving average that could be resistance. So you got to watch that one. Let's see here. If we look at the weekly chart, you can see here, I mean, how high this has gotten. So this is definitely, a company that makes a lot of money, especially when gold starts to go higher. And I think that we can see that in 2023. So this is going to be one of my picks for 2023. Still working on others, but I'm going to set alerts here for a breakout. I like the way this looks at the moment. So that is gold and silver also, actually. All right, where's the market at now? Still going down. So we're going to have a little bit of a gap down. See what happens. Rob, what do you think is going on today? We're going to get a dip buy, a little bounce. And the yield started to turn also. So the yields will go up if they think that the Fed needs to raise more or keep rates higher. The yields are going to go down if you get really, really good inflation numbers, like tomorrow, for example. If we see really good inflation numbers, you'll see that this will all look red. The yields will go down. Depending on the number, if it's really good is showing like inflation coming down, you will see the yields back off, which is usually good for the market. And that's why I look at this, TNX. This is the 10-year Treasury yield, and this is the year chart. So as the yields have gone up, our markets have gone down. It's been that inverse correlation the entire year. So we saw down here, made it very clear that we were at this trend line, and then we started to see a bounce as the market started to act a little weird and pull on back a little bit. You can see here from October when we hit the high for the yield started to fall, the markets went up. Same thing for the dollar index that is still up a huge amount on the year, even though it pulled back a pretty good amount. So these are just things that we watch. There's a lot of them. A new scanner that I developed was a very simple scan to create, but that was this right here. So this is going to find stocks that are at very low RSIs, and it's going to be the bigger companies. I've excluded a lot of the small, tiny little cap companies. I want those big companies that have earnings. Well, Rivian doesn't, but those big companies, and see where they're at on the charts. And taking a look at this, we have Ford. Want to take a look here. Alerts set, like I said, this is where I want to get into the stock. Looking at it on the daily chart, this is what we're looking at. So pulling up the RSI, you can see here the RSI has this very oversold. All right, so when it's oversold like this, you could see a bounce, right? You could see that oversold down here, we saw a bounce. We're oversold again, maybe we could get that bounce. What I'm looking for, although, is to see if I could get a better entry, because I kind of missed that first move up. So I'm hoping that you get that first move, you get a pullback, and that's where I would want to get long. So Ford right now is at 1154. My alert here is at 1130. So we'll see if I could get into this on the open, if it drops, with the rest of the market, until we can see maybe a bounce. So that's what I'm looking at here. Tesla's RSI is just ridiculous. 24. That is a crazy low RSI. This is going to bounce at some point, because I know markets don't just go straight down. there's bounces. They don't just go straight down. There's bounces. This straight down here has been so much pain, a lot of selling. So we'll see what happens with that. But, still watching this, looking for those reversals on very oversold things. And like with ExxonMobil, I was looking at, getting into puts at resistance. So it goes both ways. But, you're kind of fighting the price of oil, which I don't love. So we'll see what happens with that one. All right, guys, we have 15 minutes to the bell. So I'm going to end the live stream here. Probably make a video later on today to update some of my positions, see where the day went. But, trade safe, trade smart, understand that 2023 is going to bring so much opportunity if you know what to look for. Like at the beginning of this year, I had said in our Discord that energy was going to be the best thing to get into. XLE was my number one pick for the year, and that has been just an amazing thing to have been in. ExxonMobil itself is up over 75%. So that was the way to be in 2022. In 2023, we're going to have to do our homework, set alerts, and come up with some ideas for ways to trade. But you have to recalibrate. You can't be the same trader. If you didn't find success in 2022, when there's so much opportunity, so many big moves, then you need to realize what you've done, what your mistakes were, and change with the market and go from there. All right, guys, hit the thumbs